So there's three important questions that you ought to be asking yourself when looking at tax planning. The first one is it legal? Because at no point ever is it worth doing something illegal, simply because A, it's wrong. Secondly, I can assure you, you'll get caught out. I've seen too many cases in the last 25 years where people come to me with a tax bill, and when you look into it, they were just plain stupid. They should have just paid the tax in the first place. They haven't paid it. I've got one guy right now called me up. He's doing rent to SA, by the way, doing really well. Got £1 million in his bank account, cash, profit, and he's paid no tax in the last 2 years. Made 2 million quid. Made £1 million, well, made more than £1 million, but he's got £1 million cash, profit in his bank account. No tax paid. This guy's nuts, mad, can't be helped. So illegal, never do anything illegal. And by the way, HMRC love picking on property investors. So every, I don't know, 2 to 3 years, they'll pick one particular area, could be Kent, could be Norfolk, could be anywhere, could be Hull, okay, and they'll target buy-to-let landlords. Do it all the time, and they'll make a ton of money, because there's a lot of people out there who own anywhere from 1 to 5 properties, sometimes more, okay. They think they're quite clever, and they don't declare any of the profit. Okay, and then HMRC come in, make them pay the tax. On top of that, then they ask further questions. How did you afford to buy the property? With these people, they've usually paid cash or paid a cash deposit, can't prove where it came from, so they tax them on that. Then they charge them a penalty, usually 100%, and then they charge interest on the tax. So where they would have paid, let's say, I don't know, £3,000 a year, and they've not paid it for 5 years, so it would have been a £15,000 tax bill, ends up becoming a £75,000 tax bill. It isn't worth it. It really isn't worth it. So that's number one. Number two, is it effective? So is what you're doing, okay, effective in terms of how much money you spend on it versus how much money you're going to make? And the reason why I point this out is I've come across people where they've paid anywhere from £1,000 to £50,000 for advice, and the tax saving on that is a lot less. Now that might not sound plausible to you or very practical, but it happens. So that's number two. And number three, is it acceptable? So you're going to answer the third question, acceptable to whom? Who should your tax planning be acceptable to? Motiyul, because you came in late, you can start off.
Acceptable to me.
Anybody else?
HMRC.
Sorry?
HMRC.
HMRC. So you both said HMRC. How do we decide if HMRC will find it acceptable?
The law, legislation.
We're going to go down that path in a minute.
I'll leave it to my accountant.
Okay. You, sir, the law.
I've got a tax accountant who understands it inside out.
Mm-hmm.
So I follow his advice.
Okay. So, have you ever asked your accountant a question and he sent an email to you with a link to HMRC's website?
A few times.
Okay. It says, have a read of this. Who makes the, apart from you, because you'll know the answer, who makes the laws in this country? Who writes the laws in this country?
Government.
The government. Yeah. And what's HMRC's job?
Advise the government.
Okay. What else do they do apart from that?
Harvest money for the government.
Harvest money from the government, okay? So when the government writes tax laws, what do HMRC do?
Enforce them.
Before they implement it?
Review.
Who said that? Yeah, you're right. So HMRC interpret the law, the rules, and then they share that interpretation on their website. Do they share that interpretation, Ross, based on what's fair and right and acceptable, or based on how much money they can harvest from you, me, and everybody else?
Maximum.
Maximum money. Okay. So if your tax advisor ever sends you a link to HMRC's website again, you ought to ask him, is that the actual rules, or is that just HMRC's interpretation? He should come back to you and say to you, that's HMRC's interpretation, and say, go back to the law then and tell me what you think. Okay? Because that happens all too often. All too often. If you take nothing away from this course today, take away the fact, but just because it's on HMRC's website, it doesn't mean it's the rules or it's the law. That's how they interpret it. This is why we've got a system here where we have a first-tier tribunal, upper tribunal, court of appeal, so on and so forth, because HMRC aren't always right. I can tell you now, when they go to tribunal, they lose as many cases as they win. Yeah? So don't be fearful of challenging HMRC. And while we're here right now, if you don't have tax inquiry insurance, it's worth paying for that. If you're a member of the Federation of Small Businesses, I think they charge you about 175 quid a year to be a member. They give you the insurance. If not, you can buy it through your accountant. It's probably about £100, well worth having. You get £75,000 worth of protection if you have a tax inquiry, which means you can have a good tax advisor, a barrister or a KC, used to be QC but now it's a KC, and they can help and support you, so it's well worth doing. So the answer to question number 3 really is, Motiul, you were right. Is it acceptable to you? Can you sleep at night? Are you confident that the rules that you've applied, okay, are the rules as they ought to be? And if you're happy with that, absolutely. If you think you're going to please HMRC, you're never going to please them, by the way. Because they're never going to be happy. Because I've heard of cases when they've come in. I've never had this, by the way, but they've come in to look at the affairs of a taxpayer, and the accountant gives them all the information, and the person sits there and just keeps going through everything and says, I'm not going to leave until I find something. Happens often.
Yeah.
They do it. And the good thing about VAT, by the way, is if they come in, they usually spend about 2 or 3 hours, look for stuff, they don't find anything, they'll probably go away. With a tax inquiry, it takes months, sometimes years, and they just ask you a question again and again and again, because simply, they have their own internal targets, which we don't know about. But if they're getting paid, say, £40,000 a year, they've got to bring in £250,000 worth of income. So they're going to sit there and they're going to find reasons and excuses to get money out of us. That's how the system works. If anybody's naive to that, okay, now you know better. Yeah, that's their job.
Isn't there a threshold though at which they look at their cost to follow an inquiry?
Yeah.
And say their cost is £5 grand, unless they're going to make 6, they wouldn't bother.
You're shaking your head.
Yeah, I don't think they work like that. They're not accountable for what they spend. They'll get counsel and lawyers and solicitors for minimal amounts, really. Generally.
Do you have a view on that?
Not at the moment.
Isn't it
He's
also
smart.
a bit of a shock factor that if they can find amongst like a small group somebody who hasn't quite done their accounts properly, then it shakes everyone else up going, oh bugger, if they found him, then they might find me. And they tend to then find in a particular area, if they've hit it, that all these other little people come out of the woodwork and start paying more money as well.
Yep, that works well.
What I will say is the HMRC, like everyone else, is responsible back to the Treasury, and they have to, it's still public money they're spending, so they can't just fritter away on solicitors and everything else.
No, I understand that, but I don't think they always do a cost-benefit analysis on the case.
They have to
I
be
would say,
accountable. They have to be
Yeah.
accountable.
So, if you ever have been unfortunate, and I hope you haven't, to have a tax inquiry, or if you go onto their website, they use the word random. So they say, we pick out people's tax returns, because it's called self-assessment. So you assess yourself. So it's process now, check later, by the way. So you can put whatever figures you like on your tax return. At some point in the future, HMRC might look at them. So they lead us to believe, by the way, that they'll pick out your name by chance, by random, okay? Yeah. I can assure you it's anything but random. So they have a risk assessment team that sits down, goes through your file, and then looks at everything you've done, and they have access to a lot of information, a lot. And then they'll assess your income, your expenditure, how many properties you've bought, how many mortgages you've had, how many loans you've had, how much you've paid off in terms of loans, and then they'll work out from there, are we going to make any money from this chap? If the answer is yes, they'll look further. If the answer is no, they want to open an inquiry. Okay, so they have a team that pre-assesses the case. So when an inspector comes to you, they know about 90% of what they need to know. Yeah, the 10% is how do you run your business, what's happened, are there any particular transactions we can go through. And again, as a side note, if you're ever in that situation, the only one advice I can give you is do not lie. just tell them the truth, because they are going to find the truth anyway, and if you lie to them, they're going to charge you a much bigger penalty. So just say, this is what happened, this is how it happened, be honest with them, and I can assure you from experience of having obviously acted for lots of people, if you're honest with them, they prefer that approach because they can't be bothered to kind of go around the houses. They'll take it easy on you. If you lie to them, they'll give you a much bigger penalty. So they assess cases before they pick out an inquiry. Cindy?
One thing I do know, especially with the speaker bureaus, when they do a tax analysis, they're sometimes not after you, but they're also after the person that you're doing business with. So if you're an SA, in this situation, they might be actually after a company that's used your organisation a lot to do business.
Yeah.
So that's why they take a lot longer, because they used to come in like every year for 5 years and go through the books, and it wasn't us they were after, it was the people we were doing business with.
And that happens a lot too. So they'll pick an inquiry into a particular person, look at one or two of their customers or one or two of their suppliers, check them out and say, well, hold a minute, there's some more tax to be made here. So that happens quite a lot. One inquiry leads to another 5 or 10 or 15. So I've seen that quite a bit as well, and you're right. Or sometimes they could be going after Booking.com, Airbnb and whatever.
Exactly.
And look at all of their...
Airbnb is being hit because of the amount of people that are putting their rooms out. And in actual fact, they're either under an illegal subletting, where it's actually a council house and they're selling it out, or they're also doing where it's rent to rent and they're not on the right mortgage for the owner as well.
And a bigger problem we're going to have for all those people who do SA, although we're not going to go into it because it'll take too long, is you've got two different tax rules. So most people who are doing SA fit into the furnished holiday let rules, okay, where you've got to meet certain thresholds and criteria. And then you've got proper service accommodation, which I liken to a bed and breakfast or a guest house. Most people out there who are doing SA are using the rules of a guest house or a bed and breakfast, but there should be a furnished holiday let business, so they don't meet those rules. So at some point in the near future, I think you'll see a lot of inquiries into service accommodation. I think a lot of people are going to have a lot of problems because people are claiming capital allowances, they're making pension contributions. Section 24 doesn't affect you if you have an SA or a FHL business, but you've got to meet the rules. And because people are using the wrong rules, they're going to have major problems. On top of that, there are people who are using TOMS, the Tour Operators Margin Scheme, for when they have income of more than £85,000 because they've got to pay VAT. And in most cases, TOMS doesn't apply. So there's a big ticking time bomb at some point in the future. So if you are doing SA, make sure if you're not using the FHL rules that you are providing other services. And if you're using TOMS, that TOMS actually applies to you. Yeah? 3 years ago, when I was asking HMRC about a particular situation, say this person here running this particular SA business, TOMS applies to them, can you confirm? They'd come back and say yes or no. TOMS, your Tour Operators Margin Scheme. This is where people who are running service accommodation, Cindy, they can pay less VAT, so they only pay VAT on their margin as opposed to the gross income, but you've got to meet certain criteria. And
is that something you're covering today? Because I'm very interested in that with the
no, because that would take like 2 hours to talk about just about TOMS. But 3 years ago, they'd give me an opinion. Right now, their response is, the law is very clear, okay? Read the law, interpret it. If you're having a problem interpreting it, tell us which part of the law you can't understand, and we'll talk to you further. So basically they're saying, we're not giving you any advice.
When you say, you have to choose the right, way of paying tax, so would you get your accountant to do that? Would you explain to them, this is what I want to do, and then they would advise you on, what sort of rules to follow for tax?
Yeah, absolutely. So I had a call with somebody on Monday, and she's doing SA, by the way, and she said, her accountant said, okay, buy your SA units through one company, and then once you get to about £75,000, okay, then open a second company, okay, and run your SA through that. Then once you get to another 75 grand, do a third one. That's not how VAT works, by the way, okay? Because if you've got two companies, okay, with the same people, and or one or more people are linked to two or more companies, then that income is added together for VAT purposes. Okay, because otherwise everybody would have 3 or 4 companies. So you've got to pay the VAT together. So sometimes an accountant might not give you the right answer. So you've got to be sure you choose somebody like our friend over here, that the accountant understands the particular sector you're in. But usually the answer is yes.
So would you advise that basically when you start up your company, is at that point is to look for an accountant rather than doing your deals and then 6 months down the line you're like, okay, well, let me find someone now because I need to start looking into.
Yeah, absolutely. Start from day one, because they'll give you the advice then in terms of your business structure, okay, whether it should be a sole trader, partnership, LLP, limited company, whether you should have other people involved, whether you should give shares to your children, and then take into account what's important to you. Are you buying, are you selling, are you flipping, are you refinancing, are you looking to pass your estate to your children, that type of stuff. Have you got any key employees or people who are working with you? Should they have shares? So it's a whole host of things that you ought to do before the event, because if you do it after the event, it's going to be costly. And that's the challenge with tax. Once something's happened, we can't go back and change it. So you've got to do it well before. So I'd say if you don't have any property, talk to an accountant now. Yeah?
Are you going to cover company structures and group holding companies and things like that?
Those are big things. I'm going to cover some general stuff for you that people ought to know at the start. Okay? Then I'll talk about how you can find out about all that stuff as well.
Does the same apply for where people are obviously trying to then split VAT by having different companies for SA? Does the same apply
Yes.
for flipping if you're doing with different partners for different houses or
For VAT purposes?
VAT? Yeah.
Okay, so when you sell a property, my friend, do you charge VAT?
Yeah. No, sorry, no, I don't. No.
So it doesn't apply. Yeah.
Okay.
So you only ever charge VAT on property if it's a commercial property. They have an option to tax. That may or may not apply, but if you're flipping houses, there's no VAT. So you can have 10 different companies with 10 different people, no problem. Yeah. It's only when you have 2 or more companies doing the same trade and you're trying to escape VAT, it gets aggregated. So for flips, you're okay. You can have as many as you like. Thanks for watching, and I hope you enjoyed this video. If you have, by the way, make sure you click like, subscribe and post a comment because that tells me that you're engaging and you're finding the content useful. And if you like this video, make sure you check out this video here because it's the next stage in terms of your learning and development.